The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's up 146 at 26,145. S&P's up 15 at 2903. You've got the comp index right now. The comp, where did that go? The comp index is up 75. You got the VIX down to under 13, under the teens at 12.43, down 0.71. And we're looking at the E-mini, which is up 16, right at the Chapman Wave Falling Axe trend line resistance. It snuck above it momentarily earlier this morning, pulled back quite sharply, and now it's back again at 2909.25. If it manages to get to 20, right here, if it manages to get to 29.15 today, that's going to be really impressive. That's really going to help on the weekly basis for tomorrow. Unless there's really bad news, that means that there's a good chance to test the high that was made on the 29th at 29.2175. This is the Z contract. This is December. All right, key support will be on the 120-minute chart. Any break of 2900 to 2898 suggests that this is a rotational aspect and that the stocks that were rallying are starting to give it back. All right, give back. Let's just talk about this for the moment. The Dow up 144. I have to call this now a leg C. I mean, this is the way it is because of the alternate count. One of the reasons why I learned many years ago that at G, I've always got to put in an alternate count because unless the technicals fail immediately, that G could just pull back a little bit, use time, and then make another new high. Usually it's G/C, and then you get the D. But what's really important about this is that for subscribers to my opening call, and we are short, we're still short actually, I had said that if there was a move in the 120-minute chart in this gray leg B, which looked very much like a peak B at 26,145, which would have made a Chapman Wave 3 with a Chapman Wave 4 going down. Remember, it has nothing to do with Elliott wave. It began with a kind of concept of 5 waves, but that's about the only thing that it resembles in Elliott wave. This is something completely different because, look, 4 went below 2, and that just isn't allowed in Elliott wave. All right, so that's just number one of many divergences that are different. Now, what is important is I said that would be 4, and then we could see 5, especially if 26,145 is taken out. Even though it's a leg C, it's underneath. At that point, it was underneath the previous high. So I had to consider that it would be a Chapman Wave 5. As it stands right now, I think there's just enough nominal strength to say maybe there's one little more whoosh to the upside towards 26,190s, 26,210s. And then I think we've got to look for almost all the indices to have kind of run their course to the upside unless there is some kind of news that comes out that just gives another trigger to the upside. For instance, whatever it is has been helping Boeing. I got an email about this just now to say Boeing has gone even higher. It is still within this trading range, but Boeing's 3.65 rally today and a 9 point the other day really was a big factor in having the Dow move much higher on a percentage basis than the S&P. Today they're kind of close, although the Dow's leading up 0.54, S&P's up 0.50. But this is really important because I've said Boeing should stay in this trading band. I don't think it'll make a new high. But hey, it's holding pretty darn well. Look at this, even the monthly chart is holding pretty well. It hasn't broken to a new high. I said it's think of it as a rectangle phase made up of 2 U formations. The second U is taking a little bit more time. We'll see what happens. All right. So now let's get back to our story. S&P, SPX, S&P is up 14 at 2903. I have this arch formation shown here. It's gone a tad higher than I'd put in. Still lagging in some ways the Dow's action, funnily enough. All I can say is this: at 29.03, if the S&P goes to 29.09 to 29.10, closes there, there's a real good chance 29.16.50, the all-time high, will be tested. That was the peak deep top that went from 29.16s down to the 28.76s. So this is a good counter trend rally. Weekly chart still strong in the Dow, still strong in the S&P. Monthly chart is really good. Okay, now let's go to this. You've got the QQQ lagging a lot. 187.52 was the all-time high. Pulls back 7 points to 180.44. Now it's in leg B, but I want to see it break above this down gap down candle of the 5th of September with a high of 185.55. If it can break above that, that is really impressive. Then the weekly chart will go higher and the monthly chart should go higher. That would really be very, very good action, because it wouldn't turn the MACD positive, but the stochastic would be running. I'd have to say I'd be impressed, but we'll see if it's able to break to an all-time high. IWM, now here's the laggard. IWM only up 0.16%, up 28 cents at 170.90. Not showing the kind of strength yet. The weekly chart is still holding well, but the technicals are starting to fail. The daily chart making a cup-shaped formation. Will this become a cup? I think it's going to fail. Or the failure pattern that says you could get an arch formation, two fighting patterns, cup and arch. So we'll see what happens. The only way that the cup will succeed is if it cracks 173.40, and it's at 170.94 right now. Now this is going to be very important, because gold had a really good session yesterday, had a really good session earlier this morning, ran all the way to 12.18s. Now it's at 12.07. And I said to subscribers, I still think that the dollar is consolidating. I don't think the dollar is breaking down just yet, although you've had all these stories that says the dollar's, it's kaput with the dollar. I don't think so. This pattern here is a formidable pattern. The Chapman wave stalk leg formation, leg, body, beak in the weekly chart, neck, and then the beak is really the head that comes down, and it's in the middle of the oval pattern at 96.64. I can just tell you this. I will agree with everyone who's saying that the dollar is done. If the dollar closes below 93.50, below the body, then I'm saying 93.15 would be the immediate target of the 200-period exponential moving average. I got a feeling that this is it's at least attempting to form an arch, lowercase h, that could become a cup formation base. I don't know. All I'm saying is that we're still long the dollar from 90. It's at hit 90, almost 97, trading at 94.63 right now. I'm watching it closely, but we do remain long. All right, next thing I want you to do is silver, SI. Silver is down 0.05 at 12.40. Not a great chart, as I said yesterday. Gold was a little bit better chart. The gold chart essentially says, we'll talk about it. We'll get back, we'll talk about gold.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. Dow's up 141, S&P's up 15. And let me just go to the GDX for a moment. GDX is now trading at 18.05. It hit 18.42. It made a low just the other, I forgot to type that in. It made a low the other day of 17.20 or something. Yeah, 17.28. So yeah, it's nicely up. It's up $1. I mean, that's what, 8% or something. A very quick move to the upside. But what's really important about this is the candle that's forming right now in the weekly is exactly the kind of candle that says if the low of 17.28 holds for 2 bars, this is a weekly chart, so that'll be this week and next week, and the upside of this week is taken out, and there is a close above whatever the high is this week, let's just say it's 1842. Maybe there's a higher high tomorrow, but let's just at least for now, that you've got an 1842 high. If there is a close above it, remember, look at the week, a few weeks before, there was a nice doji candle, and then there was a move above it, but it closed inside, and then the next day it gapped down, next week it gapped down. This is the moment where the stochastic at 10%, not single digits of 6 or 7%, but at 10%, has a chance to start to rally to 14%, 17%. MACD is horrible. It says a lot of time needs to be taken in this turnaround with a lot of testing of the whole 17s, even if it rallies, the 18s will have to be tested. But at the same time, the daily chart has been making a higher MACD on lower lows, and a higher stochastic on lower lows. So that's essentially what's called a positive divergence. However, until the daily chart, that was the weekly chart, until the daily chart, you see this little gap? Actually, it's a big gap. The gap, that was the gap from last week on Monday, I guess, no, Tuesday, because of the holiday. So whatever it is. The 1850 low, and the next day, trading day was a high of 1835. So you've got a 15-cent gap. The high today is 1842. I would suggest that it's not the gap, but it's the candle high. It's this candle high of 1884. If there is a move in gold above 1884 in the next, it has to be fairly quick Today's Thursday, whole Thursday to left. Friday till about 1, that's where trading gold starts to slow down. Let's just make it the whole day. Go to Monday. Monday, let's do the show. On Monday, during the show, if there is a push, even if it's just a spike and it doesn't hold, into the 1890s, that would be the first really positive follow-through candles with the technicals improving for a W formation in the MACD and a potential W formation in the stochastic. Why am I talking about the GDX, the Van Eck Vectors Gold Miners ETF? It's because you want to see gold moving, and simultaneously you want to see gold stocks. And I do mean something like a Royal Gold trying to get off the bottom. It made a low just the other day in the 72. Was that around number 72? 71.91, went just under it, and trading right now 74.83, 3 points up, 4%, not bad. But here again, Royal Gold hit the 200 period exponential moving average in the weekly, hit that channel that I drew the other day, the parallel channel. This is the moment of truth, because if Royal Gold, and let me just choose, I'm not sure yet, you want mining? Nah. ABX, American Barrick, a little bit better. GG, Gold Core. Nah, they're all doing this. ASA is my favorite, just as an indicator. Oh, not really. Okay, this is tough. If the gold miners, the GDX, let's just take it as a whole. If it starts to trade the way I'm discussing, and does not take out the low that it shouldn't really take out the low, if the dollar is going to start to pull back further. And I'm not sure that, see, I don't think the consolidation of the dollar is done. I'm just saying I don't think that this is it for the dollar, that it's had its move, kaputznik, it's over, it's just going back to the 90 area. I don't think that's correct, because if you look at the EUR USD, I'm jumping around, of course, look at this pattern. It is good. It is really what you want to see in the GDX, and you haven't seen it. But the monthly chart is really not great. It's really struggling, and so is the weekly, basically struggling. Although the MACD is just about to turn up. Stochastic's at 50%. I need to see a 1.185 move. It's at 1.167 right now to say, hey, now we've got a trend that says euro for the next many weeks is going to be moving higher. Dollar for the many weeks is going to be moving lower. USD JPY, USD JPY, very nice leg C, trades. I can't say it trades with the dollar. It did for a while. In fact, it was a very good clue to what the dollar was doing. But this is very strong. This is very good action. So USD JPY, first time it's going to start to challenge in quite a while. That 112 area, 112, 113 trend line, major long-term trend line from back in 2016 high in the 125s all the way down, comes down to under 100, bounces to the 118s, pulls back to 105, and now it's at 111. This wedge pattern is going to be very important. All right, let's get to the nitty-gritties. High-grade copper, high-grade copper. This is not gold. It's not a bad pattern, but it's really failing. And the weekly chart, this is an important candle, because the MACD is trying to turn up. Stochastic still flat at 12%. The candle is important at 2.69. You want to see this candle get to 2.74, the 9-period moving average in the weekly, and then 2.80, the 14-period moving average. We'll watch this very closely. Crude oil spiked up, and then it spiked down, and now it's trading down. Ooh, now it's down to $1.55. Made that little double top pattern. Usually these U-shaped patterns, if you take out 1/3 to 50% from the lip to the base, at some point you're going to test the base, and that would say that a test in crude oil of the 66.86 on the continuous contract is going to be really important, because the 200 period exponential moving average of 66.18 is like a magnet right now. And I think it's the TLT we need to look at, and then we're done with these things. TLT is running up 47 at 119.41. All I can say is stuck in a range. Look at this. just as what we were looking, I was with Tommy O'Brien. Tom couldn't make it, so I was in at 10 o'clock. Oh, we were looking at natural gas. So I've got the natural gas continuous contract. Look at this. A rectangle formation can last a lot longer than your patience, and that's just been going on since the beginning of January, since the low of February, the week of the 16th of Feb, down at the 2.66 area. This has just been stuck in a range between the 3 and 266, up and down, up and down, up and down. It's right in the middle of the range right now. So I think we've covered a whole chunk of things. I didn't do the XLF. Good question about the XLF. XLF is down 0.02. It's not acting very well. The Select Financial Spider and KRE, the regionals, acting even worse. So this is going to be an interesting market. Let's look at the broker index when we get back. XBD, where is that? It is up a bit. All right, I'll be back.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. Just real quickly, the E-minis at 29.09. It made a peak E-top in the Chapman Wave 2-minute chart at 29.11.75, and it must hold 29.06. If it goes below that, it's going to go back down again, and any move above 29.12 would be really impressive. Peak D in the 5-minute chart, peak D in the 10-minute chart. Let's go to Fred in Ormond Beach who wants to look at Mike. No, it's Mike in Ormond Beach who wants to look at Fred. Hi, Mike. How are you?
I'm doing great, Basil. Fred's is like a chain of like discount stores, similar to like Dollar Tree, Dollar General, Family Dollar. And a couple days ago, it gapped way up on news that their pharmacies are going to join forces with Walgreens or something like that. But anyway, there's a huge gap, and I see we're starting to fill that gap. And at this point, do you think that I think you have some rules about gap ups and when they start to fill.
Right.
If they go in a certain percentage, they most likely will go all the way to the bottom. What do you see this doing?
So there are a couple of things going on here. So I've got it as a full-service pharmacy. So it's like it's not. So if I don't quite get it. So it's when you say like a dollar store, that wouldn't be the full. It includes a full-service pharmacy. Or am I wrong about that?
Well, I was in one of those stores a while ago. It was up in Georgia, actually, and it was like a Dollar Tree or something like that. But, they could have changed. But anyway, like I said, I was wondering about if this gap can get totally filled.
Yeah, so I tell you why. The reason why I mentioned that because we once had RAD, R-A-D, Rite Aid. Because I looked at it as a potential turnaround, and actually it had a fantastic gain, and eventually we were out, but it went a little higher, and then it came all the way back down. So if you look at this as a turnaround situation, so I'm looking at Fred's Inc., stylized Fred's, and subsidiaries operate in 15 states in the southeastern United States with 304 full-service pharmacy departments located within. So I guess it's within the store. They also have it. So Fred's skyrockets on 165 million Walgreens deal. So that means it's already made a deal, huh? Or maybe it's just a. All right, I can't get the exact information. Maybe I can. I'd like to get a little closer to the exact information. Okay, there it is. On a per share basis, I had a loss of 88 cents. All right, so okay. Okay, this is the earnings report. Fred's Inc. reported financial results for the second quarter and 6 months ended August the 4th, 2018, second quarter fiscal 2018 versus net sales down 4.3% to 490. Yeah, the reason why normally I wouldn't worry too much about the fundamentals because mostly the price is going to tell you a lot about the stock. It's kind of nice to know what area they're in, etc. This is what I'm looking at. The low that was made at $1.30 back in June, the first week of June, saw a rally within 4 weeks to within 4 weeks to a 265. I mean, that is a monster rally. Then it pulls back sharply to 150. August of 2000, the week of the 31st. And then it has a little bit of a bounce, and then yesterday, 4 days ago, there's big news, and it pops to the $3 area, actually $2.98. Now it's back down again. So I'm looking at this and I'm saying, immediately I look at it and I say, aha, this is a story stock, because there's nothing there in terms of the earnings. I mean, the earnings, when you look at it, the earnings are very disappointing. It's a potential takeover or amalgamation somehow with some big pharmaceutical company. So I would do this. It's already gapped down sharply. It held for 2 days after the gap, which was really impressive. It went all the way to 298, the 233 low, held for 2 days, and then boom, today it drops sharply. It's both economic and probably some disappointment here. I'm going to say to you, because it's in play, and I know that you like to look at, you're prepared to look at the longer term, if there is a potential there for a big bounce or a big drop. In this case, I think you're right to keep your eye on it for a big bounce. But the only way I would do it is, I think 216 for me, if I treat it as an option, just a non-expiring option, hopefully non-expiring, I think 216 is too much. I would be prepared, though, to put at 190 to 186, I'd be prepared to put some money as a spec. And you might have to wait. You might have to wait. Who knows? It could be 2 days, or it could be 2 months, or it could be a year. And I don't think if it's going to be waiting more than 2 weeks without a story, that it's actually going to push to the 280s. I think it's going to be stuck in a range, slightly lower highs, slightly lower lows. There's a story, so I don't think it's going to go back to the $1.80. I don't think, you never know, but I don't think it's going to go $1.80. I think it's going to just get between 190 and 180. I don't think it'll break 180. So I'm going to say to you, look, I don't think you have to rush into this. Keep an eye on it. Maybe start a little bit under 2. And I would do this if it's between $2.03 and $2. Give me a yell. Let's look at it together. But I'm thinking you have to be in it for the spike, because that's just the way it works. And then I think you need to get out, because it's done that every time. Spiked, and then you better get out, because it gives back more than 50% of the gain. So that's the story. And I think that my rule of thumb is that it's broken its support. The 14-period moving average of 208 is kind of the next target. I think it is a bounce around there. I wouldn't be surprised if it slips under it. So I'm looking at, I'm not sure exactly, because I need to have one more day to see how it deals with the doji candle. But 199 is the 200-period moving average in the 120-minute chart. I'm thinking in the 190s, maybe just under 119 in the 188 area. Maybe that's where you can start, just having a little bit of a position, knowing you don't want to put enough money in this that if it works out fantastically, not only do you retire, but you buy TFNN, because that's just too much risk. But I would say that it's got the history now, almost like a biotech stock, of news-related gaps to the upside. I just treat it as maybe a potential another one. I just wouldn't get too carried away. What I would say to you, on the day that there's an announcement and it gaps up, I would buy it the moment the story is. As soon as you see the story, I'd add to the position. If you haven't got it, that's where I'd start. If you do have a little bit, that's where I would add. Why? Because you can see each candle, the low of the day, it closed at the high of the day. So the low of the day was fine to get in because it closed towards the high of the day. I just look at the history, that's all. But as a long-term buy and hold, it's a tough one. I think this one has a greater chance of going broke.
That's what I would do. I would treat it like it's a biotech, and like I said, I just happened to be looking at it. I saw, we had the big gap up, and I was wondering if it could possibly fill the entire gap. So.
Now, I don't know if it'll fill the old gap, but I do think that it'll test 2 at some point in the next 3 to 4 days. Hey, thanks, Cole. Good eye, Fred. Good eye, Fred. Good eye on Fred, Mike. We'll be back. Dow's up 138.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks, we're back. So Apple is trading up 6.74, 227.8. So one of the things with Apple, and one of the things I've been saying is that when you've got Buffett having such a big position in Apple, I'm not sure shorting Apple at any stage is really worth it, because there are always going to be these big bounces, even if it comes down sharply, unless you're short-term trading and just take your profits. There's any little eye blink, and it's going to have a big pop, like it did after a lousy day yesterday after the announcement at 1 o'clock. And all of a sudden, it's up. From the low yesterday at just about 220, it's up at 227. I mean, this is 7 points. That's big, 3%. So I'm looking at this and I'm saying the monthly chart is still very strong, but the gap up with that candle of August with a new recovery high on the very first trading day of September. I think that was the first, wasn't it? Right there. Well, it would have been the first trading day after the long weekend. Oh, no, it wasn't. Yes, it was. On the 31st, it goes to, yep, and on the 4th, it makes a new high. Says to me that I could draw a rectangle, and that rectangle would make the 214s, and yesterday almost the 216s, so 214s and 207, that whole area would be very strong support. Now, if Apple makes a new all-time high, there would be a V-shaped recovery. If it goes above 229.67, pops over it, and then breaks down and closes in the under 226 within 2 days, then I would say, yep, you've got your V-shaped double top. But a V-shaped pattern is different to a cup formation. A V-shaped pattern says, yeah, you can actually pull back. Usually I say with a cup formation, if you pull back between 1/3 and a half from the lip, the left side lip high, to the cup low, that's the base, and there's a good chance if you close between 30 and 50% at any point below that left side lip after making or touching the previous high, you've got to be careful, because you can go all the way back to the bottom. That's exactly what Boeing did. Look, Boeing did the same thing. Look, Boeing, first time, look at that peak D, pulls back and rallies. And then once, it makes a peak D, has a green candle, and then a big red candle, and that said, hey, it's going to be pulling back. And now what you've got is slightly new high in the cup formation, and it's pulled back, and it's really it had been struggling. It didn't go to the low, but it certainly went to 327, and the low was 311. So it had a very sharp pullback. But then what happens if it consistently stays in a range, you can see the U shape become a W formation, a double U. And at some point, even if there's a nominal new high, this is the usual pattern that I look at for these shapes. is that eventually it breaks down and it tests both the left side low immediate one, in this case 327, and then it goes for the left side low, in this case 311. So looking at, I think upside is kind of limited. The downside, I think, has a lot more potential for growing if it takes out the low that was made just 3 days ago of 337.31. It's really exposed to the downside quite a bit. So, okay. Now, what was I doing? I was the reason why I did. Oh, I was talking about chart formations. So I had another question about the EWH, Hong Kong, I believe. That's the EW Hong Kong. Yep, hit the. Oh, that's what I said. Be careful because I'm anticipating a hit of the 200-period moving average of 22.69. It's up. It's up a little bit. It's 23.55 in the weekly chart. See, look, here's the weekly chart. Look what the GDX did. GDX, no, I didn't mean the GDX. What was I looking at with the 200-period moving average? I just did a whole thing on it. GDX. I'm not sure. Was it Apple? No. What am I looking at? It had to be something. Anyway, I'll think about what it was. But the pattern is that the EWH is attempting, just like gold is attempting right now, and the euro, this is an attempt. Hit the 200-period moving average, is attempting to break above it. Oh, I think this is what it was. Royal gold. There you go. Royal gold. See, I have these images in my head. They stay in my head as patterns that it's like I have the memory of this. Not the names, but the memory of the patterns. So yeah, royal gold, this is it. It's very important that all of these, look, let's just make it real simple. If the dollar at 94.64, and it did hit the 94.40s this morning, it didn't break to a new low, 43, it double bottomed at exactly the low of the 28th of August. Usually that means it's going to try to test it one more time. I'm making it real clear. The dollar, I think, is still consolidating huge gains from 88 to 90, just about 97. In the pattern that I look at, it's done everything we're talking about, even the fact that it went to a sell mode in the daily and then to an arch formation, lowercase h, and did this test that we just got right now. So I'm looking at this and I'm saying, okay, I think the dollar, look at the MACD, just about to turn negative. In fact, it's 0.01, it's just turning negative, but the week has still got another day to go. And the MACD is negative. So I think the dollar is a consolidation. And that's why I'm saying it's kind of disappointing to see that gold down 1.7 right now is not trading in the 12.22, 12.28, and then 12.34 area. Yes, it could do that, but that's what it needs to use any excuse, and it can't. It just doesn't seem to take any excuses. But this little pattern here in the weekly says that gold is close. It touched the 9-period moving average for the first time since June the 15th. When it was at 13.22, it touched the 9-period moving average, the pink line. And look, here it is again. So this is the first time there's a possibility that it can do that. So if you're trading gold, treat it as a trade that potentially could go for a few weeks, even maybe 6 weeks, if the dollar continues to digest its gains. I just don't think the dollar is going to break completely. I think it's still going to go to higher highs. That's my thinking. We'll see. Okay. Got that out the way. Question about FXI is the question was, is the bottom in? And I think you have to put the two together, almost as if they're commodities. You have to put the whole package together. FXI, nice gap to the upside, up 92 cents at 41.67. iShares, China large cap ETF. Hey, you want to be getting something that's been at 54 and is traded down to 40 and has the potential for a nice move to the upside. This is what I'm going to suggest, Julie. If you're interested in buying it, probably yesterday was the day to start, just in terms of risk reward. But here at 41.67, now you have to buy less than you would have yesterday. But I'm going to say to you, look, it's gone to a trough G in the weekly chart. The MACD is flat and lousy, but it is at 21%. If it was flat and lousy at 6%, I say, geez, this is terrible. But at 20%, at least it's got some energy, a little testosterone. What I'm really looking at is at 41.67, the FXI in the weekly chart is suggesting that if there is a higher high than this week, In other words, if we get to, say, the 42.30s, hey, that shouldn't be a big deal. Then you've got yourself a potential trade. So I'm saying, yes, you could start a position here, realizing that the monthly is still in a lousy downtrend, but this might be the start of at least a pretty nice bounce, time and point-wise, but it better work by Tuesday of next week. I hope that helps. I'll be right back. Basil Chapman, Dow's up 130, S&P is up 14. Well, looking at different stocks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Don't forget, Steve comes up straight after me. Then you got Dave White, you've got Tom O'Brien, and I will be back a little later with Tom. So Home Depot, down 2.58. Leg D in the weekly chart. And I've called this a leg C in the monthly chart. Building materials, appliances, home electrics, got everything. I'm following this real closely. I'm also following, this is cash, my cash index. Cintas has made a peak F top in the daily chart, a leg E, potential peak E this week in the weekly chart. This is overalls, uniforms, rentals, SPY for the S part. SPY is under the all-time high, but just barely 291.74. It's trading at 290.71. Dollar up and just over $1, and it makes a new leg G/C. And I have to think that's an instant restart. That means you could go a little higher. A failure here would say, okay, watch the MACD and stochastic very closely. And H is Home Depot. So what are they saying? They're saying that they are all at Amazon. I forgot. Amazon is the A. Amazon trading up $1.87 right now. Not that good. Made a peak D at 2050.50 on the 4th of September. Peak E in the weekly, leg E in the monthly. So all of these are right on the cusp of pulling back, but haven't done so yet. So I'm looking at this and I'm saying, I have markers. Look at this, the speed with which you've gone to peak B, C, D, E in the weekly chart of Amazon. Usually the speed going to a D, especially in E, says there should be some, it doesn't say major sell-off, it just says there should be quite a bit of a pullback at some point soon. Well, 2050 to 1920 is not really, I mean, for Amazon, that's not very much. So yeah, you've got Apple, you've got Amazon, you've got the SPY, you've got Cintas, you've got Home Depot, all of them with nice recoveries, holding close to the highs. I'm looking at this and I'm saying, wow, to start a new bull market at this level, to break out like that, it's really, that would be so unusual. We start a consolidation, that's more likely. It doesn't mean to say you have to crash anything. That's my stance. Raise cash. We've got positions we're looking at. We're still trying to buy positions on laggards. Don't see any problem with that. So keep in mind that this is a very selective move. We saw Caterpillar earlier on. Big move up.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The